Okay, what happens at the end of the captive? And I'm going to give you the sort of plain vanilla version today. When money comes out of the captive, it's going to be subject to tax. So the question is, how is it taxed? Right now, distributions from a C corporation, which is what we're talking about, I'm assuming, by the way, that we don't have some other way of getting this money out. But if you're going to distribute the money, it's going to either be taxable as a dividend. This is a general rule here. It's either going to be taxed as a dividend or it's going to be taxed as a capital gain. And the difference is going to be how you take money. Think about it as if the money is going to dribble out of the captive, it's probably going to be taxed as a dividend. If it's going to come out all at once, as in, for example, you're going to close up the captive or you're going to redeem the captive shares, then it's going to be taxed as a capital gain. Right now, and historically, although who knows what's going to happen in the future, the dividends rates and the capital gains rates have been lower than the ordinary income tax rates. So not only are you getting a deferral when you do this structure, but you're also accomplishing a rate shift. So just go back to the beginning. Remember, we're getting a deduction at the C Corp operating company level against income that could be at least, income tax rates that could be at least 35%. And if you've got state income, it could be higher. And you're getting a distribution at dividend or capital gains rates, which right now are 15%, and then plus the state if you've got a state income tax. So it's a deferral play and it's a rate shift play. Now again, it's entirely possible, who knows, that you could get some sort of a flat tax that all tax rates are the same, and then the captive would just be a deferral play in terms of the benefits to the family. Now, don't forget, I mean, it's still a great wealth transfer plan, just isolating in on income taxes at the moment. So right now, it's a really nice advantage. The other thing to think about is it may be that you don't really need to think about taking this money out. And I'll give you one example of a client that we're working with who's in that position. We have a client who is is already buying land. It's undeveloped land. It's not exactly a hobby. It's more like an addiction to just buy land in their community whenever it becomes available. It's a farm situation. Their hobby, I guess, it's not really a hobby, but their hobby is farming. I mean, they hobby in the sense that this is what they do outside of their normal business life. It's really operating to some degree as a farm. But his goal is to continue to buy land and just buy it, hold it, and preserve it, and keep it forever. The captive can be a perfect vehicle for that because land doesn't have any taxable income. And so he doesn't have to pay tax when he buys a piece of land. He doesn't have any income coming in, unless it's a leased property, but he's not buying leased properties in the captive. And then it's essentially never going to be distributed. It's just going to be held and passed. So there'll never be a tax on distribution, at least not in his lifetime, because it's just a buy and hold strategy. Now, maybe someday there's going to be, he may die 20, 30, 40, 50 years from now, and maybe there will be some taxes due. But in the meantime, he's accomplished what he wants to accomplish. There's other ways, by the way, to shelter tax inside of the captive. I've seen people use annuities. I've seen people use life insurance. We tend to stay away from using life insurance in particular. I have just a feeling about using life insurance here, which is not, I mean, I've had discussions with people who are doing this, and I can't point to any code section that says they're wrong. All I can do is point to a history of the service attacking anything that looks like tax-deductible life insurance. And so I don't know. People tell me sort of anecdotally that the service is looking at this. I don't have any personal information on it. Who knows what's going on? I just think this is a really good deal for our clients, just as it is. And so we're focused on, just kind of going right down the middle, doing what we think, is already a great deal, not trying to make it a huge home run on top of it. So But in any event, that's the taxation on the